American Express was one of the worst performing stocks in the Dow last year, and it got off to a shaky start today in 2016. Shares of Amex fell almost 3% after Fidelity ended its relationship with the firm. Mary Thompson has more now on the latest piece of business lost by American Express.
After a tough 2015, American Express stumbles out of the New Year's gate. Fidelity Investments ending a 12-year relationship with Amex and Bank of America in favor of a co-branded card from Visa and U.S. Bancorp.
This is part of a long list of losses for them.
The loss of the Fidelity business wasn't unexpected and not a big hit to the payments giant's top or bottom line. Amex says the Fidelity cards accounted for less than 1% of its total billings, and analysts speculate it could be offset by a pending card deal with Fidelity rival Charles Schwab. Still, it comes after last year's loss of co-branded business from Costco and JetBlue. The Costco loss especially painful as cards linked to the discount retailer accounted for about 8% of the Amex cardholders' total spending. The co-branded space increasingly competitive, with partner firms demanding steep cuts in the price Amex charges for processing transactions or managing rewards programs, making many of these relationships economically unattractive for the 165-year-old firm. So expect the spotlight on CEO Ken Chenault to grow harsher. After 14 years at the helm, he's recently lost key managers and potential successors to either death or departure. His growth strategy for the firm hasn't been heartily embraced by shareholders. And because of this, analyst Chris Donat says he expects Chenault and his troops will continue to rely on expense reductions to appease investors.
I think you might see more pressure on American Express to do things around their cost base. They do a lot of things around the world and, a lot of different geographies, but it seems to me that with that large cost base, there should be opportunities to reduce that.
Off 27% in the last year, Amex's stock was the Dow's third worst performer in 2015, trading at levels today that analysts say make the company considered by Forbes to be one of the world's most valuable brands, looking more and more like a value play. For Nightly Business Report, I'm Mary Thompson.